Hello, everyone. Thank you for joining and welcome to this webinar on stablecoins. First of all, I would like to thank Crystal Intelligence as well as IE Cryptocurrency Club, Bocconi Blockchain Club, and Acube for hosting this amazing webinar. And of course, our amazing panelists, Andrea, Emanuele, and Gilles. Um, Please let me quickly introduce each of the speakers. If you want, I'm going to pass the ball and each of you do a small introduction. Andrea, if you would like to start.
Yeah, 100%. Thank you. First of all, thank you so much for having me. It's a pleasure to be here. I'm Andrea. I work in the partnerships team at MoonPay. MoonPay is one of the leading payment infrastructure providers in crypto. In a nutshell, we make it very easy for customers to get exposure into crypto with traditional financial payment methods such as credit cards, Apple Pay, PayPal, Venmo. We want to make it easy for the customers to bridge their traditional financial accounts into crypto in a way that is easier for them to enjoy the benefits of this new stack. And we also have a big focus on stablecoins lately. So exciting to discuss more about this later.
Happy to go next. Hey everyone, Emanuele Rossi. I'm part of the business development team for all things stablecoins at Anchorage Digital. Super quickly about Anchorage, we are a crypto platform, an institutional crypto platform, and we are home to the first and only federally chartered crypto bank in the United States of America. Our bank has oversight from the OCC, which is the Office of the Comptroller of the Currency, the national bank regulator in the United States. And through this licensed entity, we can provide a wide range of crypto services. Our platform at this point in time supports custody, trading services, more crypto native operations such as staking and smart contract interactions. We also have the ability to provide fiat support. For example, we provide USD custody and wiring capabilities. And on top of this sophisticated stack of digital asset technology, we are building our stablecoin business. I'm very focused on issuance of stablecoins under our bank. We also are actively exploring money movement operations, specifically looking at interbank settlement type of use cases. And of course, like many stablecoin nerds in the space, we are also looking at FX. And that's basically my day to day. That's a little bit about myself. Great to be here and excited to chat about stablecoins.
I will take the next one. Gijs op de Weegh, the most difficult name here in this webinar. I'm the founder and CEO of StablR. StablR is a MiCA compliant stablecoin issuer from Europe. For sure, we will talk more about MiCA in the coming hour because it's an interesting and challenging topic. We issue two stablecoins, EURR, our Euro stablecoin, which is backed by the Euro, and USDR, our USD stablecoin, backed by US dollars, both under the European regime. We have been active now for a little over 9 months. We have currently on exchanges around 200 pairs live, over 60 venues trading in our stablecoins. Volumes rise already above 9 billion. So interesting time to be in stablecoins, focusing next to the exchange business on the payments, DeFi, remittance side of the business, and really building out our stablecoin ecosystem from the ground up.
Lovely. Thank you, everyone. You're definitely great panelists and great companies join right now. To start off, I would like to just quickly define a stablecoin for our viewers. I leave this open to any of you who would like to answer, or Emanuele, maybe you can take it.
Well, a stablecoin is very simply just a digital representation of a traditional currency that lives on the blockchain and that is presented to the market in the form of a blockchain-based token. We, of course, have our traditional fiat system, our traditional, let's say, central bank money, fiat money that people is touching and using for day-to-day operations and commercial use cases, payments, and so forth. This traditional currency travels on traditional financial rails, legacy financial rails, whether these are banking rails or whatnot. Stable coins are simply a blockchain-based representation of the same form of money. It's essentially crypto-native money, digital money, blockchain-based money. It's a token representation of these currencies. Why are they so innovative? Why there is such a hot press around stablecoins? You are transforming a financial system from a patchwork of middlemen and providers that need to rely on technology that is in many ways has been built decades ago to a form of money in a technological rails that has been built over the last few years, that is available 24/7, that is composable, that is programmable. So it's internet native money effectively. There is a bit of nuance on how stablecoins are brought to market. At this point in time, many products out there are called stablecoins. The reality, as Gijs said, through MiCA, which is European regulation, with Genius, which is a US-based stablecoin regulation, we are starting to have more and more clarity on what can be qualified as a stablecoin and what is not a stablecoin. But at the most basic level, again, these are token-based, digital-based representations of traditional fiat currencies that benefit from all of the fantastic properties of blockchain-based digital assets.
Thank you, Emma. Very clear explanation, and thank you for introducing us all the regulatory aspects of it and what's helping the adoption. Andrea or Gijs, do you have anything to add or something you would like to add to the definition of a stable coin?
Not that much to the definition. I think that's very clear, but I want to point out one point which Emanuele mentioned, and that's it's stable coins exist by the great opportunity of use cases within blockchain. So it's not directly related to high volatility crypto trading, but it's actually a technology which make the banking system and our daily money operations so much easier that it brings chances, first of all, to people in regions where they had no access to the financial ecosystem. But secondly, also in money movements around the globe, it creates this whole playing field which have been dominated by very old technology. And now the use case of stablecoin create the opportunity for the use of blockchain within the financial industry.
Yeah, just to close it off, like I think both speakers gave a fantastic definition, but yeah, the point that really strikes with me about stables and I'm really bullish on is like the fact that until now, if you were a builder, if you wanted to build a financial application with dollars into it, you had to rely on a banking system that is old, it's centralized, and you deeply depend on a stack that you cannot control. So if you choose a provider of a bank, you're gonna stay with their costs, you're gonna stay with their speed of execution, you're gonna stay with their centralization, and you don't have control over that. Now, with these new rails of finance, that as they say is powered by blockchain and stablecoins, you have the choice. So you as a builder, you can choose the one you prefer, the blockchain you prefer. You can choose a cheaper one, a faster one, a more centralized or decentralized one. And you have a very tech-friendly way of doing that. So before you had to rely on an API from a bank and that was it. Now you have many things that you can plug in. And the programmability like goes 10x from where it was before. So like it's very exciting also from a business and builder perspective of someone that wants to apply financial structures to their systems. So that's very exciting.
Thank you, Andrea. Yeah, the programmability can be some game changer. Now, I would like to dive in a bit more in the use cases or the current use cases of stablecoins. Andrea, you work for MoonPay, which is a global powerhouse in the infrastructure connecting basically fiat and digital assets. You already have millions of users worldwide. And maybe you can tell us a bit of the use cases you see and with MoonPay, and also how is MoonPay positioning itself to enable all of these use cases that are changing the payments, investments industry.
Yeah, representing MoonPay, we have been kind of in the payments industry for the past few years. So we have seen the different trends from customer of what they need. As Diego said, MoonPay is a financial payment provider. So what we do is we enable people to get access to crypto with their traditional financial stack. So anything you have on your own credit card, Apple Pay, PayPal, you can use that to buy crypto. So we and by offering this kind of bridge rail between these two worlds, we have seen how users and customers change their way of perceiving this as a use case and what the utility was. At the beginning, when we started, it was mainly focusing on trading, so like an investment purpose. So you want to get exposure to BTC or to ETH or to whatever because you think that value is going to go up. You can sell for a profit. Then we started, innovating more, and DeFi came into the way. So people started, buying to use DeFi protocols, so to maybe go on chain, land on chain, swap on chain, do more stuff that is kind of similar to the traditional financial services that we have, but on the blockchain. So that was kind of the first shift. And then fast forwarding to the last year, stablecoins kind of went way more mainstream, and people started realizing that they could do with dollars, traditional dollars, because as I said also before, if you have your money on a bank, you are reliant to the service of the bank, so you can do only what that bank offers you. If you have your money on stablecoins on a blockchain infrastructure, a world opens up for you. So a trend that we have been seeing lately is like people getting exposure to stablecoins to actually do something that is useful for them. And this comes kind of to your question of the use cases. We see people doing a lot of things with stablecoins, very exciting things. Some to call out, and then I guess we will discuss more with the other speakers. Some that excite me a lot is like savings, for example. If you want to save on a traditional bank, you're kind of dependent on the yield that the bank can give you. If you're lucky that someone gives you that deal, it changes a lot, and you cannot really rebalance or move from one source to the other. You would have to change bank accounts, bank providers, and that's not easy to do nowadays. With stables, for example, you can have different types of deals on chain. Obviously, there is risks attached to it. I like the phrase that there is no free lunch in the world. So no one is going to give you free money. Everything is connected to, a certain type of risk or a certain type of information that the user has to have. But in terms of possibility that it opens up, there is many more than the traditional financial system. So I would expect as soon as the technology matures, that many people will be saving with stablecoins. So let's say you get your salary in euro, you onboard into stablecoins, you use, for example, MoonPay or a similar provider to do so, and then you save this money in a lending system or in a staking provider, and you generate some yield for that savings. And then there is going to be the spending. So you could have a credit card that is connected to this stablecoin account that lets you spend this money directly to traditional merchants. So you could, have the whole life cycle of your money coming in, your money going out, all using stablecoins, and obviously enabled by providers in the middle, such as MoonPay, that we make it easy to kind of connect these two worlds together. That is one I will start with, so savings and spending. Another one to quickly mention, then and maybe let the other speakers chime in, is like remittances. Before, if you wanted to move money around the world from one country to the other, you had to be reliant on different banking systems, different providers, different middlemen to do this transaction. So let's say you wanted to send money in Africa or in a country with a very different financial system than yours, you would have to manage this complexity yourself using providers and third parties in the middle. Now, potentially, you could just send a blockchain transaction in stablecoins, and you will be done. So, like on the money movement globally, this impact is also extremely interesting, and the cost goes down because there is no infrastructure anymore. There is no provider anymore. There is no banking infrastructure to be reliant on, and so you cut the costs a lot, and you get a service that is way better. It's way faster, and it it's also more secure in my opinion, because you have less central point of failures, less single point of failures in the flow. So you get the job done easier.
Yes, I take the opportunity I fully agree. As I said in my intro, remittance payments and DeFi is our core focus next to crypto trading. So I fully concur on that. But I think maybe it's good that what we see in the business, if we look at the payments, especially card payments, we see a fast growth in the use cases of having stablecoin backed cards, so crypto cards which are backed by stable coins offered by either exchanges or protocols is a thing which is moving fast. Yeah, we see a lot of fraud business in there. On the remittance side, I think it's important to mention that with people having family abroad and sending money in the traditional way, if you calculate all fees, including remittance fees and FX fees, an average transaction could be around 20% of the funds you initially deposit versus what the receiver gets, which is it's ridiculous. And what we now see with the use case of stablecoins, we can take it probably down to 2%. And that 2% is mainly based on the fact that there has to be some currency hedging in FX, which costs some funds, but the rest of it, it's transparent, it's clear, and it's fast, and it works a lot better. Then to the third point, the ones Andrea started with, DeFi. On the DeFi borrowing lending, the yield part is especially interesting. However, we still have to take into consideration that regulators don't like yield on stablecoins. It's prohibited in both Europe and the US currently to give direct yield from the issuer, because that would be the best case for getting stablecoin savings adoption. That's not there. However, in the borrowing lending markets, it's interesting how you can create yield, because, as Andrea said as well, there's no free lunch and there's a risk involved. But I think especially now and up in the next coming years, you can really profit a higher yield from the fact that there is too little liquidity in the market. So the fact that there's still a little liquidity in the market creates higher yields and create opportunities for users. They are not paid by the issuers, but they are paired within DeFi protocols, which if you take out the smart contract risks and those risks, because you work with reputable platforms, that is actually one of the best opportunities I would see, because let's take the euro example. With your bank probably around Europe, you get 50 basis points these days, and it's not that hard to get a 5% yield in a DeFi environment, up to 7.5, which is 10 to 15%, 15 times what you will get from your normal bank. So I really see opportunities for growth in DeFi because rates are attractive to put money to work there.
Thank you so much. Guys, you mentioned remittances. I just wanted to quickly ask about that 2% you mentioned that it might be possible to reduce with remittances. Do you see it happening now, or it's coming in the coming years with the more adoption with the stablecoins?
We see it already now. We see it already today on routes between Europe, Southeast Asia, LATAM, and starting a bit in Africa now. But we see those rates going down significantly. For instance, we just did a test case with euro to Philippine pesos, and it doesn't have to be that expensive. But there, the average cost was around 20% in the, let's say, the old school business case. And we are able to reduce that to 2%. We, as a currency provider, helping a platform to offer those services.
That seems also like one of the best human use cases for me, in the sense that many people have to do remittances. It's some very significant amount of many developing countries' GDP. So this can change the game in a big way for a lot of developing economies.
One thing to add there, because what I think is
Yes.
important to mention is if you talk Southeast Asia, LATAM, the local currency is USDT. It's Tether's USDT, which they are transacting in. Even local prices are nowadays more popular in USDT than in the local currencies in some of these countries. That's important because on that side, we are not blind and enforcing our own stables. We work closely together with Tether. And we are well aware that the end user wants to have USDT in most of the countries. And we actually we provide them, especially in LATAM. So you can transact here in our stables. We have a one-on-one to conversion to a USDT for our USD stablecoins. And then people can transact in a currency they prefer to have instead of putting them up with a new currency in their own native markets.
Emma, is there anything you would like to give your point of view, or maybe an addition?
Yeah, maybe just a quick comment on use cases and what we see through the history of stablecoins. Of course, Tether being the pioneer, inventing these digital dollars and really starting as a tool for crypto native traders to be able to be efficient on exchanges, exploiting arbitrage opportunities within a variety of different venues. Unexpectedly, the assets transforming in a way to save, especially in difficult economies like we were discussing earlier. We've seen a lot of adoption of USDT as the digital dollar in LATAM, in Asia, in Africa, and so forth. And now we are reaching a point in our industry where there is real utility that is being unlocked through these products, whether it's payments, operations, either cross-border payments, institutional type of use cases, or consumer-based remittances type of use cases. I am super interested in seeing the adoption and the creation of new financial services built on top of stablecoins. And I think, again, DeFi is going to play a fundamental role in this new paradigm, if we want to call it that. And we are starting to see more and more of these examples going live over the last few weeks. Major companies like Coinbase integrating lending products to allow people to lend and borrow directly from a safe consumer front end. We're seeing self-custodial wallets like MetaMask and Phantom launching their own stablecoin products and providing rewards to their customers for holding these different stablecoins, as well as incentives for touching these different stablecoins. And one area that I'm particularly interested in is FX, again, remittances, cross-border payments, local stablecoin-based type of use cases. And I'm sure Gijs has done quite a lot of analysis and thinking about the specific space, especially since he's running a Euro-based product. But how are those local economies going to adapt to these digital dollars in many places, to these digital currencies? In many places, people want to run away effectively from their local currencies due to mismanagement from the political class or financial authorities in their respective jurisdictions because of inflation, corruption, or whatnot. And again, Bitcoin is the savior, but stable coins are a more approachable, let's say, more relatable type of product that can be used to save and transact. What is the role that, again, these non-USD products are going to have in local currencies? I think, again, when it comes to savings, I was speaking to someone in the United Kingdom just a few days back, and I was talking to them about lending dollar stable coins in order to preserve some of their purchasing power and growing their accounts, really. And the feedback that I got was, why would I use a dollar when it has lost like 10% against the pound over the last year or so. And that made me think, okay, you really need some local credit-based system, local currency-based financial system to support, again, peoples that live in those jurisdictions. Many of them are want to touch dollars and escape, for lack of a better term, from those systems, but many of them want to be part of their local system and be able to spend the local currency as well. So how do you get to the point where everyone wants dollar to the point where you can create other utility around your local currency in stablecoin format and providing value really to the customers that live in those markets? So the creation of financial services around these products, it's extremely interesting, especially for non-USD stablecoins. And then I think there is a ton of demand and interest from companies to be able to get access to local rails and local, let's say, currency exposure. The main problem is always the banking system. It's so tough to get banking relationships in a variety of jurisdictions, to be able to open a bank account in a jurisdiction, especially if your entity does not operate there. We are seeing that in many places, licensed stablecoin issuers can start taking on their role and effectively starting to bank this type of folks, this type of entities that maybe are crypto native and do not have reliable access to those rails. So guys, this would be probably something that I'm interested in getting your opinion on. Are you seeing demand from companies looking to get access to those local rails and maybe they are not able to touch traditional banks and local stablecoins become a way for them to interact with the local system? Is that something that you're seeing more and more?
It's an interesting topic because we are a European issuer, so most of Europeans have access to banking system. So everybody, the thing was the logical way of thinking around stablecoin is it's a USD market. The next big entrance would be Europe, the euro. It's 20% of the global economy, so it should be there. But Europe is having a tough time. Europe has some real challenges, I believe. In one of the next topics, we will discuss more about the regulatory part. So leaving that out, I think the world will maybe be even more dollarized as of such, but still there's always a local need for stablecoins and local currencies especially. But I think what we now have in Europe is a challenging market of a currency which could be way stronger, and the use cases should be working a lot better on the euro side. But the three use cases we mentioned, remittance payments and DeFi, there I see particularly a role for euro as well in the current economy. In many other jurisdictions outside of Europe, I think there's a great opportunity to really reach out to the unbanked to let them take part in the financial system.
Great stuff. Andrea, on that Emma's question, comment, do you want to comment anything?
No, like I agree with both. I think something to add there besides, the local access. What I'm also excited about is like, as I mentioned briefly at the beginning, like new cluster accessing this as their main financial system to run transactions. Like let's bring AI to the table for 1 second. Like now it's so easy compared to like 3 to 4 years ago to code a functioning app or to code a functioning website or to code a functioning business. And all of these products are gonna need financial rails or create value transfers between these like agents or these new type of players in the internet. And just imagine the complexity for an AI agent or for a vibe coder to get, as Emanuele was saying, localized bank accounts in different countries, given that this business is purely global by design. So imagine an AI agent that would have to have a bank account in Europe, a bank account in UK, a bank account in US or wherever. It is not possible by design. So I think that's something very interesting about blockchain-based financial rates. Now that I've been, also covered by regulation, like the Genius Act and the MiCA in Europe, like to me, they were extremely important transitions regulations because they made this thing real also from a legal perspective. So they said, yes, it's true, this is a new financial system. That is the rules we want to apply to those systems, but it's a new system. It's a different system that does not rely from banks. That was a huge shift also by the political and kind of legal perspective. So it's also very, very exciting to see how this will shape a completely new system of money moves, also thanks to new players and new technological advancements happening also not only in crypto but also in tech and in AI. So that's another point that I would add. But on the localization, I think we covered it all.
Yeah, and a comment there about this digital native, internet native financial ecosystem. I was listening to a talk from an executive in the stablecoin space a few days back, and he was talking about the concept of a cross-border email. What is a cross-border email? It's nothing, right? It sounds so dumb when you talk about cross-border email. Yet we are talking today about cross-border payments, right? The stablecoins, blockchain, digital assets have the ability to do what internet did to messaging and communication to money, essentially, creating this unified layer, enabling all of the efficiencies, again, 24/7 settlement, composability, and so forth, and really bring money to the internet era. And of course, there is ramification in FX and payments and so forth. But I really just loved that type of analogy of, a cross-border email, where when you say it's something that sounds so incredibly stupid, really, for lack of a better term, and we're going to be doing the same with money, creating digitally native money that doesn't have border, and might have some limitation in terms of regulation, how entities interact with it, but it's going to move seamlessly at the speed of the internet.
Love the analogy, absolutely. And also, when we say about these things that are blocking or having some friction, but at the same time making it real, these political wins on MiCA and Genius Act, maybe Guy, you can step in here as a European issuer, a stablecoin issuer. What is MiCA? What is Genius? And how do these hinder or facilitate stablecoin adoption, and how this affects also the cross-border emailing or cross-border payments?
I think first was the point which Andrea mentioned just before, is it gives a legal background to it, so it's really good that there is regulation. If this market is without regulation, the factor trust will be a lot lower. I think to step quickly to the US and the Genius Act, I think the Genius Act is a very good example where regulators had a goal in what they want to regulate and what the end goal was for this industry. So yes, we want to accept stablecoins. It must be secure, it must be safe to use, and we put certain rules around the backing and operations behind that. But that's our stablecoin regulation, which is very effective. Looking at Europe, till today, and I'm talking to a lot of regulators, I cannot find any vision behind MiCA for stablecoins. I think the main reason for Europe was, okay, let's be the first one in regulating the blockchain industry and get some regulation out there and get things moving. Now, then you have 26 different countries discussing the subject, all from different angles. You see a pretty big banking lobby in MiCA. For instance, the fact that you cannot provide yield on stable coins. The fact that a large part of the reserve have to be held at European credit institutions. Also a very protective measure, which for the European banks, all that does not exist, especially the banking reserves in, for instance, the Genius Act. So what MiCA does, it's kind of over-regulating the space, not always very well thought of, especially not with an end goal. And it more or less ring fences Europe. So it's very good that the legal basis for a stablecoin is there already now. That's good. That creates adoption. However, the fact that you ring-fence Europe, both from a stablecoin perspective, but also from a cost perspective with separate liquidity, separate order books in and out Europe, is that Europe is a tough market. We have seen it with USDT. Tether being the first, for a very good reason, saying no, MiCA is a kind of regulation we cannot comply to because of this over-regulating facts and the influence of European credit institutions. So they said, we don't do it. That's something in the European regulatory space that created a lot of outflow of liquidity. For us as an issuer, also a good opportunity because we work together with Tether. So for us, MiCA brought some good, but on a bigger picture, I don't think it's very strong, especially if you now look at the different directions in Europe. It's pretty strange that the European Commission wants to promote stablecoins, but the ECB only wants to promote the digital euro, which is the CBDC. So two major institutions in Europe go two different ways, promoting their own direction, creating a lot of friction in the market. So that creates also uncertainty in the European market. Of course, what I think is Europe wants to, with the digital euro and their approach on stablecoins, they want only euro stablecoins, while the market is USD. And they take a very defensive approach in that, where I think if you are 20% of the global economy, feel the strength of what you are, build on it, create a vision, and promote the euro instead of defend the euro by every mean. But then you come to the point that even the simple saying, even Europeans don't want euro, because in many European countries, they want to get rid of it. It's a very, very complex playing field in Europe, which the basis of having a regulatory framework is very good. I think the execution in Europe has been rather poor. And I think the execution in the US with the Genius Act is something which is a lot better. But my feeling is that Europe also has seen the effects of the Genius Act, and that makes Europe only more defensive because they are afraid of the next Libra situation where US big tech take over the European market. So I'm a bit skeptic about the regulation, but for sure it's an interesting playing field.
Absolutely. And coming with regulation and what is difficult to adopt in the sense of, well, firstly, the government's now making it legal, making it real. Emanuele, you mentioned about the banks and this friction about how it's being accepted. You being, well, Anchorage Digital being one of the biggest and only chartered banks in the US that can have stable coins and also operates in Europe, if I'm not mistaken. How do you see these regulations taking effect and either making it smoother or harder for banks to adopt stablecoins?
We don't operate in Europe at this time. We operate in the United States and also hold a major payments institution license out of Singapore. Europe is certainly an interesting market, but we are not there at this point in time. Anchorage is a federal bank, and Genius provided a level of clarity that we never thought we would have. Just about a year ago, I was thinking about it by myself a few days back, and just seeing the change from the last presidential administration, where we were all struggling to survive for running businesses, to being supported by the White House and related governing bodies, has been such a great thing to see and to be part of. What Genius does is really, it formalizes and provides legitimacy to this technology, to stablecoins, and it gives the stamp of approval to many sophisticated institutions that are interested in taking this leap of faith into this new, better form of money to try and start experimenting with the technology, to be able to touch it and interact with it. There is a ton of interest from all different parts of the market when it comes to adoption of stablecoins, whether it's large financial institutions, whether it's payment companies, fintechs, crypto native players, and more. Everyone wants to figure out how to use stablecoins and how to have, let's say, a stablecoin strategy within the organization. In the end, stablecoins are money. If you're touching money, handling money at scale, it makes sense to have a stablecoin strategy. I'd say when it comes to Genius specifically, rulemaking is not yet here. Genius has been as a bill passed into law and signed by the president a few months back. We still need a few more months for the actual regulation to take effect, but we already have a sort of understanding of what this framework is going to look like. And there is two very clear categories in my view. One is operational considerations, and the other one is licensing considerations. On the operational side is about things that have to do with running a safe stablecoin product, the type of collateral, SLAs tied to the minting and the burning of the stablecoins and so forth. And then on the licensing side, it's really about who is able to bring to market these Genius stablecoin products. You're going to have two types of issuers in the United States, state level issuers and federal issuers. Anchorage is a federal bank. We are sitting essentially at the top of the food chain for this type of processes and for the type of stablecoin issuance that Genius is highlighting in its bill. I would say everyone is talking stablecoins. Banks are quite interested in tokenized deposits as well. They're all going back and forth on tokenized deposits versus stablecoins. Most banks are actually quite sophisticated, and we're starting to see a fair bit of activity around stablecoins within the banking space. In Europe, for example, you already have Societe Generale, which is a major French bank that has two stablecoins in the market for quite some time. We've seen just the last few weeks a consortium of European banks, including ING, UniCredit, Deca Bank, and more, announcing a Euro stablecoin as well. So things are starting to move, but there is still a lot of questions around stablecoin versus tokenized deposit strategy. My view is that the two are complementary, really, but of course banks are playing a certain type of game and are trying to salvage their business, so they want to be very thoughtful when it comes to how to implement this technology within their operations. But demand is coming from all different parts of the market. Everyone is talking about stablecoin. Everyone wants to understand how they can implement stablecoins within their operations, and Genius only formalizes the ability to access and participate in this novel space with this novel technology. One last comment. I think US banks are behind compared to European banks. Again, you don't see any type of consortium of American banks. There is headlines saying that these are in the works, but MiCA, whether it's imperfect or perfect, again, Gijs, I think, highlighted quite a few considerations tied to MiCA, but MiCA back then in 2023, I think it was passed, was able to basically give that stamp of approval to European entities who have been studying and developing technology and now are officially in the market. Again, how fast does a bank move compared to native player like StablR or else? How fast can they interact with the crypto native protocols and so forth? Again, these are all questions to be asked, but you're seeing the effect of regulatory approval. It allows the most largest sophisticated institutions in the world to have skin in the game and to actively participate in the ecosystem.
Definitely. And as you mentioned, well, you can see definitely the contrast between MiCA and Genius, and well, how important, like Guy mentioned, is the vision behind these regulations, not only the fact of the stamp of approval, but the vision that they have behind it. And before I ask the next question, I would just like to ask the attendees and the public a quick question. Have you ever used stablecoins? There should be a poll that appears. And if you like to answer that, would be wonderful. And also there should be the Q&A available for you, because we're entering our last 10 minutes. So maybe the last 5 minutes, 7 minutes, we get it for questions. So please feel free and write in the Q&A. Now, nextly, Andrea, I wanted to get you in a bit in the conversation. MoonPay as an infrastructure provider, and for taking away a bit of the regulation, now focusing on traditional finance and traditional banks, or people that funds all of these companies that operate in traditional finance and want to get into stable coins. How do you see this flowing and moving from your perspective?
That's a great point, and it kind of connects to what was just mentioned by the speakers on regulation. Because yes, regulation is amazing. It crystallizes what we can and cannot do with this use case. But then to really scale this use case to the next level, we need also traditional financial institutions to start, accepting stablecoins or using stablecoins on a scalable way. And that's not super easy for it to happen. We are not yet there, progress-wise. And working on MoonPay, we are a payment infrastructure provider, and I can tell you that it's still very hard for a customer, specifically in US or in different countries, to on-ramp directly into crypto in a very easy way. Because bank accounts, traditional bank accounts, many of them still don't accept crypto transaction. So if you go with your credit card in US, for example, it's very difficult that you would be able to buy crypto directly from MoonPay or from a similar provider, because the bank is going to reject that crypto transaction because it's against their risk appetite. So, and also it depends a lot by payment method and payment method. So if you want to use the most popular payment methods, you're going to have a more difficult time as a user to get your transaction accepted, depending on your bank, if it's a crypto-friendly bank or not a crypto-friendly bank. This with bank transfers, specifically in Europe, gets way easier. So with bank transfers, it's easier to get approval. But like the whole point is like traditional finance, yes, it's starting to look at this industry. Yes, it's starting to get exposure to this industry. As Emanuele said, some banks are launching their own projects, understanding kind of how to benefit from this. But at the same time, these financial institutions, they are payment institutions. They make money through service they offer to customer. A bank is a very complex infrastructure. They offer to customers tens and hundreds of services. And it's not necessary that they want these services to be stolen from them by more efficient providers or more efficient infrastructure. So they do a lot of pushback on that end also. And it's difficult still for a user to, connect these two worlds in a very easy way. That's what we do at MoonPay. We try to make it easier for the customer. We try to build an infrastructure that is super scalable, but the banks are always the kind of bottleneck that we need to overcome. And hopefully to connect to the regulation, this is gonna go into that direction. So now we define, how a stablecoin should be issued, what are the requirements for it to be legal. Next, we would like to see something that makes banks more and more open to this system and more open to like effectively transacting for this system, so that the bridge between the two worlds gets scalable and easier, and it's more straightforward for people and businesses to bridge over, and benefit 100% from this technology. With this bottleneck that there is today, is still not very easy for people and businesses to do so. As soon as we overcome this bottleneck, I think like we will see crazy growth rates compared to what we see now in terms of total addressable market and stablecoin volumes.
Definitely agree with you with the friction, and thank you for pointing out that maybe we're not there yet, but we're on our way. Now we have a couple of questions from the audience. Before answering them and having a closing remarks, I will just have to a follow-up poll on the last question, that if you have you ever used stablecoins? Where have you used them? I think the poll should pop up soon. If you can answer that, it would be great. Going to the Q&A, I will ask the question, and then please feel free, Andrea, Emma, or Guy, to jump in. This is from Gil Lagos, and he's asking that what is the point or your thoughts on local currency stablecoins, and why or how are they important for an individual jurisdiction and their own ecosystem development, or if it's a sound development. Maybe Guy, you can start off, since you're the issuing also in euro stablecoin.
I think for every currency, it can be a very interesting use case. Main consideration on that is how effective is the local banking infrastructure, how effective, how strong is the currency. Because if you have a very inefficient banking system, which a large part of the local population can't reach, or you have a lot of volatility in your own currency, it makes more and more sense to try to balance that, because otherwise, what you will see is technology is here to stay, and more will flow to the dollar. And for local governments, it's on average not very good not to have their own monetary policies, but they rather have solutions in their own currencies, which they can work on. So on a macro scale, I think it really makes sense to have more and more currencies. But I would think, and that's what I'm missing in Europe, is that it should be based on opportunity and not on a defensive move.
Thank you for that point. Just Emma or Andrea, do you have anything to add?
I agree with everything. I think the holy grail of stablecoins is acceptance and fungibility versus local fiat money. And I think it's not fungibility in the actual value and the way in which it interacts with the system, but in acceptance and how the consumer perceives that digital assets. Again, the end state is for people to see a stable coin, whether it's a euro stable coin, a dollar stable coin, and think, okay, this is a currency that I can spend, that I can save in, and thanks to blockchain, that I can now do a lot of other cool things with, sending it 24/7, integrating it and interacting with decentralized finance protocols and so forth. Like, this is where we want to get to. How we get there is the challenge that we need to work together as a team and as an industry. But there is no doubt that we're headed that way. I think, again, dollar stable coins, USD stable coins, we are in the process of integrating them, and we found quite a few use cases that have product market fit. What's next? How do we bring that same type of utility for non-USD stable coins? And again, there are plenty of very smart people that are thinking about this problem and looking for solutions.
Thank you, Emma. If I may do a quick follow-up question on this one, because I see a big challenge when talking about certain jurisdictions that have currencies that lose their value a lot, or very quickly. So how could you overcome these challenges and create a digital stable coin of, for example, in the Argentinian peso that has lost a lot of value in a short amount of time and regain a lot of value in a short amount of time, and the development, how to do a sound development of it so it doesn't create more problems than the ones that it should solve?
Yeah, I mean, issuing a fiat-backed stablecoin is not complex, right? In the end, you're taking a bunch of debt from the local government or depositing a bunch of cash into accounts in the local jurisdiction in order to collateralize the asset. That's how stablecoin work. Let's say I'm Tether, you give me $10, I buy $10 worth of US treasuries. And at a very high level, this is how all regulated products are going to work. Again, whether it's treasuries, cash, just treasuries or whatnot, at a high level, that's the model. So doing this in Argentina, is it complex? Not really. You can do this virtually anywhere you want, as long as you have access to a local banking system, as long as you can buy local treasury bonds, as long as you can have access to local deposit accounts for, again, that local currency, you can do it. Now, is launching a stablecoin going to solve all of the problems of Argentina? Definitely not. It comes down to the situation that is tied to the government, the political class, social factors and so forth, and all of these contributing factors cause this currency to have trouble, to inflate year over year by a lot, for people to not trust it and so forth. So is launching a stablecoin a solution? Definitely not. Could it help you provide a better consumer experience to the people in your country? Potentially. That said, again, not every country is going to want stablecoins, because, again, there is many people in Argentina that are not holding pesos anymore, because they have the ability to buy dollars very seamlessly. And what does that do to the local fiat monetary system, right? Politicians and economists are looking at the situations, and many of them are trying to put capital control around stablecoin activity to avoid a fleeing capital from local currency over to a jurisdiction that they don't have sovereignty on. So again, yes, you can launch a stablecoin. It's very easy to do it. Is it going to solve the problem of a country? Likely not.
100% agree on that. I think it's only one of the tools you have to create a new, more interesting monetary policy, but it's certainly not the answer to all your problems, because they are way deeper than the technology, blockchain technology with stablecoins on it, can ever solve. So I think it should be open to be used, create opportunities, and it can really help you, but it's not the solution for the problem.
Yeah, and maybe one last comment. I mean, some of these local systems, like in Argentina and in Brazil, they have local fiat rails, and in Europe as well, to a certain extent, they have local fiat rails that are extremely efficient. In Brazil, you have a rail that is called PIX, that you can use to send money all over the country effectively, instantly. In Argentina, you have a similar setup. So the banking system works. The problem is the currency and the trust that the market has in that currency. That's really the crux here, the problem. So how to address the problem, it's a very large type of discussion that involves a variety of parts of the local financial system, again, ranging from the central banks of those local systems to policies implemented by local governments and so forth.
Thank you, guys. To wrap up, I would like to hear your closing remarks, and then we can end the webinar.
I think what's important for me is that we are at the beginning of a journey with stablecoins. We are only at step 1 out of 100, and people within the industry almost think that we are in it for so long and we achieved so much, but we're only at the beginning. We're only doing the groundwork of something which can really can be a solution for many complex problems we have.
I agree 100%. It's only the beginning. There is so much that can be done, both by us, that we are, building at the infrastructure level with different use cases, but, we are trying to build technologies for customers and businesses to use. But also on the other end, like, my advice to every single listener would be like, stay curious, keep studying this, keep, experimenting with this, because you're gonna be one step ahead when the change is going to come, if you're gonna understand properly how this works, and you're gonna be able to have like opportunities and options to efficient some things that you do now with your money in a way more scalable and easy way. So like, keep being curious, keep studying, and it's gonna be a great ride, 100%.
Yeah, the amount of interest from traditional players and from companies that you wouldn't think are part of the conversation is incredible. People want to be part of the conversation. They want to bring solutions to the markets, whether it's the smaller startups to the largest financial institutions on the world. I agree, it's just the beginning. We are all working together as an industry. A rising tide lifts off all boats. That's what they say. And so, again, it's a matter of working together, building use cases together, and helping companies, individuals, and so forth understand the value, and regulators understand the value that this technology can bring to their local economies, and how it can really make the life of individuals much better, providing financial access and more. So very keen to be part of this with the rest of the guys on this call, and looking forward to the growth of the space.
Thank you, everyone, and please have a wonderful day. And I would just like to remember the attendees that we're hosting another webinar in 2 days. In 3 days, sorry. And it's about yield and DeFi protocol with Avant. So please don't miss it. Huge thanks to the panelists, Andrea, Emanuele, and Guy. Thank you for giving us an hour of your precious time and educating all of us in stablecoins. Have a great day.
Thank you so much for having us.
Thank you.
Thanks a lot. Thanks.